This time around, we are going to so much focus on investing in equities. Interestingly enough, because it's important for us to pay attention to how the stock markets work. We're going to focus on Uganda. We shall do a little bit of some analysis on Uganda. We're going to do a little bit of analysis in Kenya, because for the people who are in Uganda and Kenya is a very good market for someone to invest in. Then we shall also pay attention to the international market, because I personally believe the international market is it's good for you to invest in, especially in the stock market in the US. There are a few things that make money, like the US stock market. Like my friend Nikita always says, the US stock market is like it's a wealth generating machine. It makes money. So we shall pay attention. We shall look at that also in tandem. We shall talk about the ETFs, the exchange traded funds, which for the people who are starting to invest into the equities, the ETFs are the best place to start from before you learn to pick which stocks to invest in and which stocks are not to invest in. But before I go into the equities, just a little bit of a drawback. Next week on June 13th, on June 11th, we have a treasury bond auction where they are selling the 10-year bond, where they are selling the 20-year bond. Now, if you do not have a 10-year bond and you are invested in the treasury bond, this is the last time for you to buy the 2035-year bond. The 10-year bond, the current 10-year bond, which we call the 2035, for one reason. That bond will never come back on the primary market. 2, that bond ranks among the top 5 with the bonds that have the highest coupon rate. And that comes with an advantage, that when a bond has a higher coupon rate, it means it never loses its value. You might buy it at a premium, but that's a bond. In my portfolio, I buy such bonds to create what I would call a hedge or insurance. If at any one time 3 years down the road I needed to sell a bond, it's such bonds that I sell first. Why? Because they have a higher coupon rate, they always they will keep their value. That's the absolute amazing benefit of such type of bonds. So you want to always have some of those. The 20-year bond will one day come back. Now, next week, the 20-year bond will have a higher yield, which means from a profit perspective, the 20-year bond will make more money. But the 20-year bond will come back. It's a 15% coupon rate. They will bring it back in 2.5 years from now as a 15-year bond, most probably. But the 10-year bond, it's not coming back. So if I'm making a decision for next week, I would end up buying the 10-year bond because of that, for insurance, especially if I have other bonds for insurance. Yes, it's going to be at a premium. We might pay a premium of around 4 to 5%. I don't see it going above 5%, but even then, it's worth it. So I wanted to talk about that. However, if your investment is the first time you are investing into the treasury bond, we have a member here, then I would also tell you, do not invest at all. Next week, let it go. You wait for the July auction. You wait for the financial year, the 2026-2027. When the calendar finally comes out, we shall know which bonds do we have, which bonds have which coupon rate, where the yields will be, and that becomes extremely important. And also, as I finalize on the treasury bonds, and I know next month we shall talk about the Kenyan economy, the opportunities in the Kenyan market holistically. I want us to start thinking about, especially for the people who are in Uganda, I want us to start thinking about opening up bank accounts in Kenya. We should try getting the Kenya tax identification numbers. I'm trying to get a lawyer who can do it for us as a group. Why? Kenya is going into an election next year. As part of the diversification plan, for some of us, which we have created, where we say we have to diversify our investments beyond Uganda, Kenya is the next best thing. And because it's going through the election next year, we are starting to see their interest rate up in the treasury bonds. So that means right now when Uganda rates are going down, the Kenya ones are starting to pick up. So you do not want to be, especially right now when you have a chance to know about this knowledge and then you end up missing it, right? So what you see is this, what's happening is this. I'll try to make it, to explain it to you in a much more nuanced way. Let me do it that way. So every time African countries are going through an election, somehow, somewhere, that is considered a risk. In Uganda, we had an election in Jan. So in 2025, our interest rates were high. We reached even 17. Now, Kenya is going to go through an election in 2027. Right now, we are starting to see an upward tick of interest rates in Kenya. So what that means, the next few months, there is going to be significant pressures on the Kenyan market, and interest rates will start increasing, potentially even bypassing the Uganda's interest rate. So for anyone here who has over 100 million already invested in the Ugandan market, you might want to start thinking about that next 10, 20 million. How do I start moving into the Kenyan market? Remember, our goal has always been, we want to have a holistic investment portfolio. Part of having a holistic investment portfolio is being invested in Uganda, invested in Kenya, invested in the stock and the global markets, treasuries, stocks, and everything. I want us to start thinking about the Kenyan market more. So the next, in July, that's going to be the most conversation. But I'm preparing you that way. We start preparing and trying to get the teens. We need to get, you cannot invest in the Kenyan market until you get the Kenyan identification number, the tax identification number. So because of that, I'll try to get a lawyer and he can do it for us, which will make potentially the cost a little bit lower for many of us. Anyway, that was the little bit of the summarize on the treasury bonds. Then we'll go to the equities. How I want to do the equities, let me make sure there is no person who is missing, who is failing to join. How I want to go through the equities is, I want us to start from Uganda, then we'll go to Kenya a little bit, then we'll go to the US market. In Uganda, we do not have so many opportunities for investments in the stock market. Our stock market is just starting. It's a good thing, but it's also a bad thing. It's a bad thing because it means however much money you have, right now I can give you 500 million and you might struggle to get shares for whatever companies you want. It's a good thing that majority of the companies that are listed on the Ugandan Stock Exchange are just starting off. They are just starting off. Even when you look at what you would call industries that have matured, like the banking industry or the telecom sector, you do not believe that there is still room for growth. And you know, when you are buying, shares, you are buying the future, the potential of a company for the future. That's what we are doing here. So when you think about it that way, you appreciate that if I'm buying the shares of now, you're not buying its past. Like I always want to say, it's like marriage, especially when you're young. You're marrying for the future. So even buying shares, you're buying the future, the forward-looking perspective of the company, not its history. No. I know we're going to talk about the US market, but let me give you an example. Right now, next week, SpaceX is going to get IPO'd, initial public offering. And the company is valued at 1.75 trillion. Now, when those numbers come out, when the first initial valuation came out, 1.75, almost from an investment fundamentals, it does not make sense. Why? Because they're saying this is a company that doesn't even make almost 20 billion in revenue. It's a loss-making company. So what do you mean the company is valued at almost 100 times its revenue? But then then I was reading a report and someone said, what is the price you put on a company that is almost the only company that is literally building the multiplanetary travels, where almost every country that would want to visit the moon will have to either use their software. Like, it has no competition. Its competition is competing with the government. Then someone asked, what price do you put on something like Starlink that is literally now powering the internet of almost 40% of the global economy, of the global people? That the potential for it to disrupt 90%, that almost everywhere everyone is using Starlink, is 100%. And that's why you see Starlink is in Kenya, it's in Uganda, it's the US, it's everywhere. What price do you put on something like that? It's a pure monopoly. It has so much fundamentals that people are willing to pay high price because there is that company. If it succeeds by even 50% of what it can do, then it will make money. Now, if someone looks at it from a perspective of just the normal companies, the revenue, the standard, whatever, someone will tell you they have competition. SpaceX has no competition whatsoever, especially in its core business. So people are willing to pay a high price for its future, even though its future is a little bit blink. So when you are evaluating stocks and equities, that's how you have to look at it. What's the future of the company? Let's come back home in Uganda. Let's use, for example, let's start with the biggest company, MTN Uganda, right? MTN Uganda is the biggest company on our stock exchange by market cap. It's, I believe, right now valued at close to 90 trillion UGX, which is important because you have to think about it and like, how much is the value of it right now, and what is the future of MTN? With MTN, and I'm not analyzing it, but I'm giving you perspective. When MTN got listed in 2021, they got listed because there was a mandate. It was not because they wanted capital. It was a mandate for the telecom companies to list at least 20% of their shares on the Uganda Securities Exchange. When MTN got listed it with its mobile money, MTN Mobile Money, as a subsidiary. Right now, we know they are going to split out the MTN mobile money and put it into a blind trust for the next foreseeable future, with potential that maybe a few years down the road it will get listed as its own independent entity. Why? Realistically, the fintech business right now, from a future sense, it's more valuable than the telecom business. When you look at how much MTN makes from mobile money, let me, if I'm trying to get some of the numbers. When you look at what MTN is making from mobile money alone, it's not yet more than what it's making from data and calls, but the margins are way much better. The margins are way much better. So when you look at the fintech subscribers, it's 14.7 million on MTN alone. The fintech revenue is 1.1 trillion, and it's increasing at almost a 20% return, compared to the data revenue, which is increasing at almost, even data revenue is increasing, it's significantly increasing at 30%, and voice revenue, which is increasing at less than 1%. Actually, voice revenue has almost capped, because rarely do people make direct calls. We almost make WhatsApp calls. Now, data revenue is still growing, but data revenue has competition. Many people at home right now, and I mean, that's why you're seeing the cost of data is coming down. We are using Savannah, we are using this different whatever. But MTN mobile money, it has one competition, Airtel money. So the fintech value is extremely high. And that's why they are scooping it out, grow it on its own, and become its own independent company. Airtel knew that, and it split that out. We shall come back and pay attention to that a little bit later. Let's come back to that. So when you are paying attention to the companies you're trying to buy, I always come back when I'm looking at the data. There are companies that you are going to buy, that you are buying them because they are dividend companies. They pay dividends. In Uganda, we do not have growth companies. We buy companies that pay dividends. That's it. That's MTN. That's Airtel. That is Stanbic Bank. That is DFCU. It's back on it. That's Bank of Baroda. I want to add there quality chemicals, but we shall put a caveat on quality chemicals. So when you are going for for the Ugandan market, do not buy companies that are beyond those 5-6 companies. It's either MTN, where the price right now is a little bit high. Its price currently is at around what? What's the price of MTN right now? I think it's around 450 there. I need to remember. I need to know. Come on. I need to see that price. Where is it? Why can't I see it? Okay. I can't see it here quickly, but I'll get it. So, MTN, very good. Stanbic, very, very good. When you think about Stanbic, it's the biggest. Stanbic Uganda Holdings, it's the biggest. It's subsidiary. The Stanbic Bank Uganda. It's the biggest bank in Uganda. In financial services, there is something which we call the systematically important banks. Every country has them. Banks that they are systematic to the financial system of that country, that the economy and the people who manage the economy can never let it die. Stanbic Bank is one of them. It's number one. It's a systematically important bank, financial institution. If right now I have, let's say, $1 million and I'm buying shares, the first share I would buy would be for Stanbic. That's the company that is making almost 600 billion in profits after tax. Profit after tax. Stanbic Uganda. Stanbic Uganda Holdings, the listed entity, has a subsidiary that, to me, that subsidiary alone is a powerhouse. The SBG Securities. Now, if you pay attention to the global markets, when they talk about financial institutions, rarely do you hear about deposit banks, deposit-taking banks. Rarely do you hear, when you hear the banks of America, what majority of those which are Chase banks, those are in America, those are the deposit-taking banks, the big banks. But they are not the biggest. The real biggest banks are the JP Morgans, the JP Morgan Chase, the Morgan Stanleys. Those are investment banks. The future in financial services is investment banking. And Stanbic Uganda Holdings has a subsidiary, the Goldman Sachs here. The future of financial services is investment banking, which means the future is Stanbic Uganda Holdings, the listed entity. It has Stanbic Bank, the deposit-taking bank, but it has Stanbic SBG Securities that, if the law is changed, it can morph into one of the biggest, if not the biggest, investment banking. Pay attention to Kenya. Majority of the fund managers that were just fund managers in Kenya this year, they have got investment banking license. Investment banking is more than the fund management. It's more than what the fund managements are doing. These are big, big banks. So when you think about it that way, you're like, you know what? Stanbic, the core principle and business of Stanbic Uganda is fundamental. That company, SBG, the fund manager, It started it was launched in 2024, but SBG has been in existence for almost 10 plus years. They launched their unit trust in 2024. At the time, they had less than 20 billion in amounts they were managing. Right now, they are over 500 billion. At that rate, it will take by end of 2027, they might have hit 1 trillion. It's the only fund manager that I believe can easily give Old Mutual a run for its money. And it will. Why? Because it's SBG, it has the Stanbic brand, it's competing, it's that fundamental can easily propel it to attract more clients and give Old Mutual a run for its money for the top number one. So Stanbic is my number one priority for buying in Uganda. Then MTN comes in. MTN is a juggernaut. It's the biggest bank. It's the biggest institution. The problem is you have to be very careful right now. I believe MTN, this is my opinion, I believe MTN right now is a little bit overvalued because ever since they announced that they are going to split MTN mobile money, and the people who would have shares before they split would easily have shares in a blind trust until one day when MTN Momo will get listed. There has been a little bit of a demand, a higher demand for MTN shares that has seen its price to go a little bit high. Now, for me as an investment advisor, I ask myself this question. Is it better for me to buy a combined price right now? Or should I wait next year when they have split? The price of MTN, the remaining entity, is down. I buy that, and I also wait for MTN mobile money on its own. It's a fundamental question. Remember, when you talk about MTN, you are looking at a 3.6 trillion revenue. 1 trillion data revenue, it's growing exponentially, and 1.3 trillion voice revenue. It's no longer growing, it will start even going down. Those two will be the entity that will remain listed. Only the fintech revenue, the MTN Momo, is on which they will push off to their blind trust. So, does it mean if you buy MTN right now, next week, you are buying the three entities? You are buying the data revenue, the voice revenue, and the fintech. However, if you only buy if you wait for it to be split and the fintech revenue is put on the side, then you buy the remaining entity. And that becomes a little bit comparative to where Airtel is. Right? That remains a little bit more comparative to where Airtel is. Because remember, even Airtel never listed the Airtel money. It only listed Airtel Uganda, which is the mobile money, which is the revenue from calls, the revenue from internet and all the other services they offer. But Airtel Uganda, MTN Uganda, Stanbic Uganda, those are a must buy for anyone who is buying shares in Uganda. The other entities in Uganda is Bank of Baroda. Now, let's look at Bank of Baroda. Pay attention to it. Now, in Uganda, you can only buy shares. I'll give you my synopsis that I use when I'm buying shares in Uganda. Bank of Baroda is not potentially even in profits and everything. Let's look at it. Let me just export this and I show it to you in a much better, nuanced manner. So, Bank of Baroda is not your typical bank that you're going to. It's not like the Stanbics, it's not like the Centenaries, it's not like the Absas, but it's quiet. But it's a money-making machine, especially for the people who understand it. Right? Especially for the people who truly understand it. So let me just should have go to the valuation. This is a company that on its own, it has grown. In 2020, its market capitalization was 300 billion. It has more than doubled in 5-6 years later to 700 billion. It doesn't have so many customers. It has most of their customers are the Indian people, but it has loyal customers. Its efficiency ratios are so good. Efficiency ratios, like its cost to income they make is so low. They don't have many branches. How many branches of Bank of Baroda do you know? How many branches of Baroda do you know? How many people do you know who bank with Bank of Baroda? Not so many. But it has seen its price move from, in 2020, it was 20 a share. In 2021, it went to 15.92 a share. In 2023, it's 15. Right now, it's almost 40. By end of 2025, it was at 47. Right now, they are at around 54. Now, I will warn you, when it comes to equities, in hindsight, you always be like, oh, how did I miss that? You're like, oh, people are making money. Yes. That means someone who bought Bank of Baroda shares in 2023, they have tripled their money. If they put in 20 million, right now that value is over now almost 70 million. And that is before dividends. So Bank of Baroda is one of those companies that I will buy as long as I'm still buying shares in Uganda. It's quiet. It doesn't shout. It makes serious money. Right? When we come to the profits, I wanted to show you the profits. It should be... This is a company that is almost, in the last 5 years, it has made almost, on averagely, over 100 billion in profit. 100 billion. Average. In 2025, it made, you can see its EBITDA was what? 156 billion. Now, if a company has made a profit after tax of 56 billion, 156 billion, and it's just valued at 70 billion, that means it's still undervalued. It means it's undervalued. That's why people are buying Bank of Baroda. However, I also will warn you, the people who have Bank of Baroda are not buying, are not selling. Those who have it are not selling. The few who are selling will only sell at a higher price. So be very careful. That's the good thing in Uganda, that the value, the fundamental for values is extremely high. Because when you think about it too, let's come back and pay attention to something here that I would want you to pay attention to. Where is it? Bank of Baroda, its dividend yield, you can see it here. In 2021, the dividend yield was 10%. 2022, 23%. 2023, 13%. 2024, 9%. 2025, 9%. But it's good. For Ugandan context, that is very good. So there is value even in their dividend they pay out. The question becomes, can it be sustained? That brings me to the point I was trying to tell you. In Uganda, almost every company, the banking sector is still strong. It still has potential to grow. These are companies that continually have room for growth. That even when you look at a bank like Bank of Baroda, you might think, you know what, maybe they have reached their top level. No, not yet. They still have room for growth, which means even when you buy now, the chances of you making money or doubling the price doubling in the next 4-5 years is still there. Especially at the time right now where the demand for resources, the demand for investments is still high. So that is why I still encourage people to buy these companies. So the last company in Uganda is Quality Chemicals. Let me get it here. Yeah, Quality Chemicals Industries, Uganda. Now, Quality Chemicals is an interesting perspective, and it's one of those that I'm going to pay very interesting attention as you come into the stock market. Quality Chemicals was listed in 2018. Yeah, that's when it got listed. Where is it? Come on. I need to get the... Give me a second, I'm trying to get something here. Okay, yeah. Quality Chemicals was listed in 2018. When it got listed at a price of 262. That at the time, Quality Chemicals, when the prospectus came out, it had so many loopholes that were visible that anyone who bought Quality Chemicals in 2018, they lost money. Up to now, they are yet to recover that money. That company was valued at the time at $1 trillion UGX. There was no way Quality Chemicals was worth $1 trillion at the time. It had pending cases. It still had its tax exemptions. It had so many things that when you looked at the fundamentals, it was not making sense for them to list it at $1 billion, at $1 trillion. However, give me a second. Okay, I think I'm back. So, Quality Chemicals, when it got listed in 2018, it was important. It was listed at 262 a share. In 2019, its price moved from 260 a share to 190. By 2020, it had reached 100. So the price was coming down every single minute. By 2021, its price reached 95. By 2024, its price had reached the lowest at 52 a share. It moved from a capitalization of $1 trillion to almost 191 billion. That was Quality Chemicals for you. Right now, Quality Chemicals is improving. It has moved from the 52 to almost 140. And I had a question, someone asked me a question, Alex, what is driving Quality Chemicals to rally? If you look at just the last 18 months, you might see magic that, oh, wait a minute, Quality Chemicals has moved from 52 a share or 190 billion capitalization to almost 150 to almost 400 billion. Its price right now, it's trading at 140. The question isn't just about how much it's trading. The question is so much, what has changed? In 2018, was the value of that company worth it at $1 trillion? No. The value of it at that time was at around maximum 400, 300 billion. But we didn't have so many companies listed and people were willing to buy it and people bought it. Up to now, we are yet to get back to the price of IPO. And this is almost 8 years, almost 8 years later. So as you come into the stock market, that is one of those big risks that you have to deal with. The risk that understands that the price, you can do everything and you get excited and you buy the shares and the damn thing will go down and you'll be in loss. Even right now, when Quality Chemicals is improving its prices, its value, it's yet to even be back to the level it IPO did. That means someone who put in $1 million in quality chemicals, they are still in a loss position. But for you who buys right now, you are buying a good valued company, because every every unnecessary things they had, they put them off. They had issues with their tax exemption went away, but now everything is good. They had a contract with Rwanda, which was in struggles. They have rectified it. They had issues with the Zambia government. They got that money back. Now they are supplying. The government has put their mandate to buy, if every medicine that is manufactured by quality chemicals should be bought 80% from them. So when you look at that, and it's in a sector which is pharmaceutical sector, the pharmaceutical sector business, they will always make money. So quality chemicals is going nowhere. So that becomes a company to buy. The price where it is right now, it's good, but you have to understand the example from it is the price can come up and go down. So for Uganda, the only companies I would focus so much is MTN, Airtel, Stanbic, DFCU, Bank of Baroda. Then I'll add their quality chemicals as the last. Umeme, no. Uganda, Umeme is going, guys. Uganda clays, it's terrible. I blame NSSF. If it wasn't for NSSF protection of Uganda clays, that damn thing would be gone. NIC, we are yet to see what Cornerstone will do with NIC. New Vision, terrible. Do not bother. It's a media company. The media industry as we know it, it's gone. Right? So you can't invest in a sector that you know it no longer has potential for growth. So that's Uganda. For those who are not in Uganda, the other country that I would want to pay attention to is Kenya. The Kenya stock market is way much better. This is a 3 trillion Kenyan market capitalized. No, not actually, not even 3 trillion alone. It's actually much more than that. It's way much more. I think it's 30 trillion or whatsoever. Almost every bank in Kenya is listed. Safaricom is the biggest telecom company in East Africa. KCB Bank, Equity Bank, those two banks are the biggest commercial banks in the region. Their expansion is so much more. We look at Equity. What Equity Bank is doing is fundamentally, it's changing the game of the East African banks. We have always known the West African banks to be the one expanding regionally. Now in East Africa, we have Equity Bank going into the West Africa. Banks like NCBA Bank, you saw the deal that took place recently between NCBA shareholders and Nedbank. The Kenyan market has come of age, and it's liquid enough and it's responsive. In Uganda, one of our biggest challenges in Uganda is bad news should impact companies negatively, and good news should impact the companies positively. In Uganda, nothing impacts some of these shares. Nothing. People have British American Tobacco, BAT. That damn thing has been at 15,000 a share for God knows how many years. Even the people who bought, even our great-grandfathers who bought those shares, they don't know that they bought them. It's there, quiet. That's not a stock. That's not a stock you want to buy. You want to buy a company that is responsive to news. In the Kenyan market, if something is bad, if a negative press comes out on a company, the price will go down. If something positive comes up, price will go up. The market, the volatility of the market is that extremely high. So the Kenyan markets, the banks in Kenya are very good to buy. The telecoms are very good. They have recently listed the Kenyan pipeline, which was, by so many measures, it was overvalued. But someone said every time a company is the monopoly on something that almost everyone uses, then its intrinsic value becomes more than just the revenue. When Kenyan pipeline, for those of you who follow the news, when it got listed, it was easy to say, oh, it's Kenya pipeline, it's expensive. But this is the only company that does what it does in Kenya, and they want to expand it to Uganda. Countries like in our countries like in Uganda, our governments was willing to pay a price to be there, to be part of the shares of Kenya Pipeline. And when you have something like no one who has, you can set the price. You don't follow the market dynamics of this or all that. You can set the price you want. Right? So if you pay attention to Safaricom in Kenya, you can see, and this is what I was talking about when you talk about the price volatility in the market. In the last 10 years, Safaricom, 10 years ago, it was trading at 17. It went up at one time in 2021, it reached 45. Then it came down by 2023, it reached 12. Now it's back at 31. So as you buy shares, please know that the prices can go up and can go down. When we look at another company like KCB Bank, the KCB Group, same thing. In 10 years ago, it was at 31. It stayed between 31 and 46 for almost 8 years. Then one time it came down and it reached the lowest in 2023 at 15. Now it one time came back, it reached its highest of 75, and it's on the rally. The KCB Group is now one of the most valued companies in the Kenyan market. I think it's the third biggest. Safaricom, then Equity Group, then KCB Group. So, and for you who is in Uganda, you can buy these companies. Equity Group and KCB and Safaricom are, no, not Safaricom, KCB and Equity are cross-listed to Ugandan Securities Exchange. So you don't need to even go to Kenya to buy. However, some of the other companies that can make you money in Kenya, like let's say NCBA, okay, NCBA is now gone. It will be gone very soon. You can only buy them in Kenya. You can see it has been on rally for the last 10 years. In 10 years ago, it was at 17 a share. It reached 100 one time, but it's now at 90. So that means in the last 10 years, your cumulative annual growth is almost 25%. There is no land that is going, very few plots of land that can grow like this. That's what the power of the capital market is. Let me not get excited. You know, Stanbic Kenya. The Stanbic holdings in Kenya. Same thing. You see, 10 years ago, it was at 59 a share. Right now, it's over 200. And Stanbic Kenya is growing much faster than the Stanbic Uganda. It's actually become, Stanbic Kenya has become a much more systematically important component of Standard Group than Stanbic Uganda. Yet Stanbic Kenya is not the biggest in Kenya. So you think ever since they go to that MD from KCB, Mr. Igara, he has done an incredible job. An incredible job. So these are the companies that in Kenya, Absa Bank, is it Absa Kenya? Yes. It's the listed entity in Kenya. You can see they are all growing at an exponential rate. Between 2022 to 2025, almost every company, Kenya was making money. It made millionaires. That's the reason I said we shall look at Kenya on its own, because the opportunities in Kenya are enormous, especially where we are going. We shall look at Kenya on its own next month. But it gives you the perspective that if you are entering the stock market right now and you are in Uganda, the Ugandan opportunities are very few. The Kenyan opportunities are the majority in the region, which takes us now to the global side of it. I want to make sure I I'm not missing any question. Okay. No, I'm not missing any question. Globally, now, Uganda, if I'm to rank these regions, Uganda, Kenya, now regionally, globally, this global stock market. Uganda is a kid's play. Kenya, it's primary. The region, the global stock market, especially the US stock market, now that's the university of understanding. That's big boys, eh? That's you want to be part of that. You want to be part of that, whether now or in the future. So if right now, the only way for you to be part of that is by learning, do it. Learn. Nothing makes money like the stock market in the US. I don't know any. Now, recently I was brought to attention to learn a word called egodicity. My friend Miriam did. Is it egodicity, something like that? The ability of you, when you're analyzing investments, you analyze it in a way that they make money for a few people, but they don't make money. The majority of the people lose money, and you use that as the conservative way that investment makes money, which is skewed. So the US market is a little bit tricky. This in Kenya, we can say in Kenya they have over 50 companies that are listed. In Uganda, 9 companies. In total, you are looking at 60 companies that you can easily wake up every single day and read about one company. In 2 months, you will know all the 60 companies between Uganda and Kenya. In the US, the New York Stock Exchange plus the NASDAQ, those two alone might have more companies listed than anyone can ever count. Than anyone can ever count. The machine is so complicated, and I'm using this word clearly, that if you are not so much familiar with it and you're just starting, we tell you, go through the ETFs, go through the exchange traded funds. That is start there and you grow through them. Because you will pick a company and before you know it, the company has gone down, yet the stock is going up. So we talked about, for the people who are not in Uganda, who are in Uganda, and especially those who are not in the US, my recommended app for you to invest in this US stock market and the ETFs, the index funds, yes, is IBKR, Interactive Broker. Now, there are so many others you can use out there, Bamboo, this and that, but IBKR has right now close to 7 million people outside the US who are investing through IBKR. You are joining something that, one, the company itself is listed, but two, you are joining a platform that the brokerage platform that have over 7 million. So that means its controls, its compliances, and everything are strong. I use IBKR. It's recommended. I know, I'm not so sure who it was. Maybe it must have been Eliza. I can't see the people. I don't know if Eliza, you are here with us, who said you cannot fund IBKR. Oh, perfect. Let me start with your case scenario, because I think I found a solution. For people who are in Uganda, open up Wise account. It's an app. It's like what's the other app called? Wave. Now, IBKR can directly link your account of the IBKR to Wise account. Yet it's easy to open up a Wise account in Uganda. And with Wise, you can receive and send money. With Wise, these are the two areas. We won't talk about ETFs, do not worry. I'm trying to first address this. That was an elephant in the room. With Wise, it can allow you UGX, USD, Euro, and the different, I think that's quite a number of currencies, but UGX is one of them. Now, what I will do in the next 1 year, I will facilitate for my clients, I'll facilitate for you, that you get someone who can give you dollars at a good rate to your Wise dollar account. They have dollars on their dollar Wise. And you give them UGX because they always need UGX. Then you use the dollar to buy your stocks in IBKR. Why am I going for that route? The other route is, the second route is this. Thank you. The second route is, okay. The second route is where you do wire transfers, where you have to open up a dollar account with your bank, for example. Okay, I don't want to, I bank with quite a number of banks, but let me mention one. For example, I&M Bank. I like I&M Bank lately. Their service is good. I open up a dollar account. That means every time I'm to send money to the IBKR, to Interactive Broker, I send a wire transfer. Now that can do, but the problem with that is the cost of wire transfer is high. Chances are my bank will charge me like $20-$30. So if I'm sending less than $500, that's a lot of money. The money, by the time the money reaches Interactive Broker receiving bank account, they might charge you an extra $20. So you have lost close to $40-$50 in sending money. So if you are sending less than $500, that's over 10% value lost. Not worth it. Yet with Wise, you just need a counterparty. You need someone in the US who always has dollars and they need UGX. And you in Uganda who has UGX and you need dollars. So they just send you dollars, and I have already got 1 or 2 people who are willing to help me to support my clients. They have dollars, they don't charge them to put them on the Wise. They send you dollars from Wise to Wise. It's for free. Then you send UGX for your account to UGX. It's free. The question becomes, how do you put UGX on your account? Through mobile money or through your bank. So the only cost you incur, the first cost you incur is using UGX to UGX, from your bank to your Wise account. Or the people I've talked to them, who have the dollars, and I know we might have 1 or 2 people here who also might have dollars. They'd be like, yeah, I'll give you the dollars on your Wise and you pay your Interactive Broker and you send me my money on my bank account on the. So you have cut out a profitable middleman that is called Kakande and his friends in the banks. I hope they never hear this, that I'm saying it out loud, because they will be like, hey, what are you doing? Right? But it's the cheapest option for the people in Uganda. So if you can get a counterparty within your Wise, someone in Wise, and you directly link your Wise account to IBK, to Interactive Broker, then all you need to do is for them to give you dollars to dollars. That exchange is free. Dollar to your Wise to IBK, that exchange is like $2, I believe. Yeah, very low. Then you pay them the UGX, the cost is down. Cost is always important. 2, I'm going to say this for people who are in Uganda. URA is coming heavy and hard on people who are investing in the global markets to pay your fair share of taxes. Now, I don't know when they might finally knock it up and crack it to track that. But as you invest in the US markets, please and know this, URA is starting to pay attention to that side of the business. Especially long term, when that money starts coming back to Uganda. Remember, when you invest in the US, when you invest in the US stock market, but you register that your tax is in Uganda, your tax residence is Uganda, you do not pay tax in the US. Their understanding is you will pay tax in Uganda. So I wanted to put that out there as you make the decision to invest in the US market. Now let's come back to the products. When you are to invest in the US stock market, for the beginning, go for the ETFs. It's easy to get excited and you buy one or two companies that you might potentially know. Right now, when you think about companies, there is a company that I love, Micron. Where is it? Where is it? Why isn't it coming? Let me get its name here. Micron Technologies. It's supposed to come. This company, let's look at it. Let's do 1 year. 1 year ago, Micron was at $124 a share. The company recently closed $1,000 a share, though it's coming back in 1 single year. I have a client of mine. She's in the US. We look back at the shares we bought in 2020, in last year in February, March, and how they have performed the last year. The minimum those companies have performed, each company has grown by almost 40%. But we were selective on which companies we chose. Why? We had to do research. We knew we wanted the AI companies because at that point AI was picking up, data centers, OpenAI, Anthropic, what, Google. We went down. We got 10 companies. But my biggest shocker has been Micron. I look at Micron every now and then, and I'm like, I don't know. If you can get yourself a Micron, that company in 2024, where let's do 2020 August. Okay, it's financial for August. When we bought it, it was around 200 billion in capitalization. It's now over $1 trillion in 1 year. 1 year like this. And it's not alone. There are so many companies like that. The issue then comes, is it easy to know which companies to select out? No, it's not. Then you might end up saying, let me just buy the Apples, the Googles. Those will also make you some good money, right? If you look at, like, for example, Apple, they'll make you some good money. But in 1 year, Apple has grown by what? Actually, it has grown from almost 200 to almost 300. Yeah, like 30%. When you look at Google, no, it's actually Alphabet. Those are the big companies. So, but if you fear to select the companies, then you go for the ETFs, the S&P 500, and you start from there. Because at least with this one, you are sure you get access to almost all the companies out there, the top 500 companies, that you don't need to. Let me just use the Vanguard. You don't need to think so much about it. I know a client of mine, Peter. For him, he said, Alex, I'm not going to stress. I'm just going to be buying the S&P 500 every single year. Because we looked at the S&P 500, for the last 10 years, it has returned a total return of over 350%. Annually, it has been around 12 to 13%. You compound that over 350% in 10 years. In 10 years. So he's like, I'm not going to be there to every now and then call you. What do you think about this company? He can buy companies here and there, the ones he lands on that and he likes. But he has decided to focus on one singular ETF. Why? He knows that ETF is diversified enough that it has over 500 companies. But I've only told him that don't concentrate so much in the S&P 500 for one reason. Right now, it's also so much concentrated. Like they will tell you, potentially the Mega 7, the Magnificent 7 companies are contributing close to 40% of the S&P 500. So if around 10 companies take over 40%, that means 490 companies bring in 60%. That's so much. That means you are just buying so much of the top 10. And then we are going for total stock. We are choosing the techs, ETFs. We are choosing. There are so much ETFs there we can choose. I shared with you all the ETFs that you would need to buy. You would need to learn and know. What is extremely important is for you to choose 10. You need a maximum 10, but a little bit a thought process of diversification. If you buy the S&P 500, you know that means you're buying the 500 biggest companies. If you love technology, you look for another ETF that is for growth technologies, all those that in AI. If you love, I love Asia. One of the best performing ETF I have is Asia specific technology, because I'm not going to go and buy companies in China, but let me buy an ETF that combines some companies in China, some companies in Taiwan, some companies in Vietnam, all those different companies, and I buy that. And it's interesting because the last 2 years it's returning close to 26% per year. You know, so you have all these lists of the different ETFs that you would need for you to make a decision on which one to buy and why to buy. You just have to apply some thought process why you are buying it. So you can see here like MSI. Let's, if I'm to click on it, let's see what it will give us. iShares for BlackRock. And the list I gave you, it has, the list I sent to you, it has almost the names and this number, the LP. Just check the LP and Google it. It will tell you this fund seeks to track the performance of an index that measures the performance of US large and mid capitalization stock, exhibiting relatively higher momentum characteristics. That's it. Right? So you're like, oh, so the biggest and medium capitalization stocks, okay, that's what they are doing. Then for me, okay, maybe I have access to the data. I'll come here and I say, what companies do they have listed in? Then they have the Micron, they have Advanced Micro Devices, Broadcom, they have Nvidia. Nvidia has done so much magic that somehow everyone right now is thinking, what is the next Nvidia? I missed Nvidia and I accepted. But I accepted because I have believed I can never make all the money in this world. Intel, Johnson & Johnson, ExxonMobil. So if someone buys something like this on the iShare, MSI, MSCI, you know you are buying something. Let's look at its chart, how it has been performing. Right? See, in the last 10 years, that thing has returned over 359% total return. Last 1 year, it has returned a 33%. iShares, US Momentum ETF, 1 year, 33%. Like, you think, every time I'm doing research or I'm doing a session about ETFs, the stock market, there are numbers I look at and they humble me. People know me so much for the treasury bonds because it's treasury bonds, because majority of Ugandans will never get a chance to invest in this. But I would want to tell you, to teach people so much about ETFs, because here is the number. One ETF in one single year, 33%. In 3 years, 128%. Okay, in 5 years, at one point it went down because of 2022. 2022 was a bad year. 10 years, it has returned 359%. That's the reason we want you people to, we want us to invest in these. That's why I'm saying, do not, here, they have already selected for you the companies they have. So if you buy that ETF, it will give you access to Micron, to Advanced Micros, Broadcom, Nvidia, Intel, Lam Research Corp, Johnson, like one ETF. It is giving you access to all these. Let's check out another one. Let's check out another one. And as I come closer to the conclusions before I open up the questions, let's look at Fidelity Blue Chip Growth Stock. I love Fidelity. For the people in the US, I tell them, go for Fidelity. Fidelity is an amazing investment platform. And it has some good ETFs in there. Let's go to the holdings before we go to the performance. So for Fidelity, 14% of it is Nvidia. It has Apple, it has Alphabet, it has Amazon, it has Microsoft, it has Meta, Broadcom, LI, Netflix, Marvel. This is not even S&P 500. This is blue chip growth. And it has given you, so when Kakanda I go buy Nvidia and I come and I also buy Fidelity Blue Chip, it means I'm overexposing myself to Nvidia. Let me buy my ETF and I keep quiet. Which ETF do you buy? You have over 1,000 ETFs that I gave you. Go through them after this session. Let's engage. Ask the questions. I would appreciate the questions in our chat to be, Alex, get me the data for this ETF, and I get you something like this, and I put it in the chat, and everyone goes. So if every person comes up with the 10 ETFs for us to go deeper into the research, and I get you this kind of data for analysis, that means 10 people, 10 ETFs, those are 100 ETFs. That's 100 ETFs people you have access to know which ones to buy. You're not going to buy 100 of them, you're going to buy just 10 of them. But you start saying, oh, okay, that is Fidelity Blue Chip. Let's look at one more. We have looked at iShares. I'm not looking at iShares again. Franklin is good, but let's not go there. Let's look at Goldman Sachs Growth Opportunities ETF. What do they give us? Let's see. Let me look at holdings first. What do they have? Oh my God. They also have Nvidia, Microsoft, Apple, Amazon. Literally, whatever the companies they have that side, the companies they have this side. So, do you see how when you're making research, you end up avoiding buying the same damn things? So you can't buy now the Goldman Sachs Growth Opportunities and you buy also the Fidelity Growth, because they almost have the same things. They are tracking the same things. The only difference is in attribution, that the other one I think had 50%. This one has the other one had 14% of Nvidia. This one has 13.95%. Let me get you something which is not growth. Let me get you something that is Asia specific. US large cap, we have looked at that on large caps. Pay attention to BNY. BNY ETFs are actually, sometimes they're really good. I like them. BNY Melon. Vanguard, no, I've done Vanguard. iSwabs, this swab, it's also very good. That one, I like some of those. The swabs, like which one? I'm trying to look for something that is Asia specific. Let me go down. Just Alex, go down. There are so much ETFs out there that you can, even 10 people cannot make the same research and they come up with the same ETFs. Let me see this QQQ. Okay, let's see this. What is it? What holdings do they have? Okay, at least this one has different holdings. So this is investor in core QQQ low volatility ETFs. Now that means this one is tracking companies. Yeah, invest core QQQ. Yeah, it's tracking companies with the low volatility whose prices are a little bit more stable. And you can see it has Lindy, it has American Electric Power, Excel, Automatic, Monster Beverages, companies that you don't even know. It has Microsoft Corp. It has majority of the companies in basic materials, consumer technology, utilities, industrials. So there is so much out there that you can get. So the ETFs are there. As you start this journey in buying ETFs, be careful, do your research, know why you're buying the ETF. The easiest ETF you already throw around is the SP500. But that is just one. There are millions out there of different ETFs that can even compete. They can make you more money than the S&P 500. You just have to put in time to research. At least one thing I'm so sure, you have the data you need to make the research on the ETFs. You have these different numbers. Just find time and Google, or when you find the numbers you are interested in and you want to get a little bit of more data, just say, especially which holdings they have and how they have been performing, put them into our chart, and I'll get you the data that even other people can learn from that. But as we transition to start investing in the US market, I implore you, start at the ETF side. What my parting shots on the stocks, I advise only buy the stocks that you know you are sure of and you have done good research on them, or you have engaged someone and you say, what do you think? You have done some fundamentals research around them. ETFs will also make you some good money. Back to you, ladies and gentlemen, for some questions. Yes, Lydian. Yeah. Mm. No. So I don't know why, but I've been investing with Interactive Broker, and we always get our payout. Now, a platform that has almost 70 million people, it wouldn't be growing like that if it doesn't have, if you can't get the, if it can't get out the payout, right? But I don't know why for the Denmark guys, it's like that. Let's take it offline and I see. But because you can get your payout. And two, for the people who are going to use the WISE system, you can withdraw your money to your WISE account and then you withdraw your money from WISE to your bank. Yes. Thank you. Yes, Ronald. Mm. So there are some shares, there are two elements to this question. The first one, there are some shares you will look for that those who have them are not willing to buy, to sell. However much money you're putting them on the table. Now, I'm saying this because that it's my sentiment, and I know a few people in the market who play in the market have the same. NSSF is the best thing to have ever happened to our stock market, and it's the worst thing. Why? NSSF owns almost 40% of the floated shares on the Uganda Securities Exchange. They have the most money. But NSSF never buys to sell. So NSSF will have the shares, the price will go up or down, it's never to sell. Its intention is never to sell. And institutional investors like that never sell, it means that for them they buy to hold. You end up having a few retail investors that end up selling. Right now, I will tell you, one of the reasons our stock market in Uganda, its price is going up, is because there is too much demand and limited supply. People have woken up. People have truly woken up to invest in our stock market. People are looking for shares of companies. No one is selling. MTN listed just 20%. Out of that, almost 15% is owned by institutional investors. The other 3% is owned by big retail investors who will never sell. The other 2% is owned by people who are willing to sell but at a very high price. Same for Airtel. Now, I will tell you something. Airtel is doing a secondary listing very soon, potentially in the next 2 to 3 months. Prepare your money. If you miss out on this Airtel secondary listing, you look for Airtel shares and you won't find them. The shares they did not sell in June in 2023, they are planning to sell them very soon. So that's the issue. 2, there are some shares you would want to sell and no one will want to buy. Now, when no one wants to buy your shares, it means the company is terrible. People have new vision. Uganda craze. No one is buying that junk. Why? Even if you give it to them for free. Umeme. There was a time when Umeme was the crown jewel of our stock market. Right now, you will look for someone to give you 50 shillings. No one is willing to. They're like, what if government refuses to pay? It won't be the first time with our government, the government of President Museveni, refusing to pay people to honor agreements. So you have to be very careful. What you buy, you have to appreciate that I'm buying it because there's a demand for it. That if I'm to ever put it on the supply market, you have to supply it. But to buy the Uganda, now to get on the serious business, to buy the stock market in Uganda, you have to register on on the Uganda Securities Exchange, the portal. You choose a broker. Every time you have to buy shares, that broker goes out and looks for you, and he gets or he doesn't get, whatever. And that's how you do it. It's still that a little bit mechanical. So as you choose which companies to buy, you have to be very careful. I've seen a few questions in the chat. A team. What if you're in Uganda but have access to the dollars? Do you send wise? Yes, so a team, what I'm avoiding you to do is sending dollars through wire transfer from your bank account to Interactive Broker. What then you do if you have dollars in Uganda, you rather fund your Wise account and directly connect your Wise account to Interactive Broker. On the taxes, I'm saying the taxes on URA because I'm going through a tax audit. It's not present, my friend. Turns out being a voice of investments, URA gets excited when they are watching your videos. They're like, how much tax are you paying? and then they start asking you some tough questions. So I'm going through a tax audit with URA. It's not pleasant at all. And part of that is your investments in the US stock markets and whatsoever. And what they are trying to do here is their estimate is to say, if you're just investing and just having capital gains, but you're not selling, they will not bother you. But at one point, they will want to see, at what point do you sell? What is your total realized gain? And they give you a capital gains tax of 30%. Yeah, 30%. But depending on how the system is going to get better or complicated, one thing I know right now is that URA is getting a little bit chippy. They are getting their hands oiled, saying that there's so many people who are thinking they are becoming wiseacres, investing in the global markets to avoid paying us tax. They are trying to find a way to get to that money. There seems to be a lot of ETFs that are, for some reason, you have all spoken highly of. For beginners, they will be very overwhelming. All these ETFs, for Ugandan investors, what would be the minimum? The minimum 10. Oh, okay. Now, ETFs, let me explain a little bit. Let me take a step back and explain to you how ETFs work. What might work for you might not work for someone else, but let me explain. ETFs are a combination of specific companies that have specific characteristics. And one of the investment bankings or hedge funds will combine that and sell it. So sometimes different investment bankers will combine the same companies, and before you know it, you have like 10 ETFs. So for example, S&P 500, there is a Fidelity S&P 500, there is iShares S&P 500, there is Vanguard S&P 500, there is Invesco S&P 500, almost Goldman Sachs S&P 500, almost all the big banks that have ETFs have S&P 500. Of all the S&P 500, you just need one. Whichever you choose, they track the same companies, they perform the same way. So you never worry about that. Then you sit back and be like, I love to invest in technology. Then you look for an ETF that is technology specific, that tracks the technology companies. Then you're like, oh, me, I'm interested in dividends. Then you say, let me look for the dividend ETF. And you see which companies. I'll do some analysis and I come up with some 10, 20 of those and I send in an article for it. But that's the analysis we use. It's, oh, I want to get some dividend stocks, but let me get dividend ETFs. So you look for companies that are dividend ETFs and you buy that. Then you're like, I'm trying to do high growth, high risk. You look for the ETF that is that. Then you say, I want to get into manufacturing. Companies that are manufacturing, you look for that. Consumables, telecom, banking, almost they combine them using specific requirements. That's why I'm saying that even if the 20 of us, 25 of us, if each person comes up with 3 ETFs that is not S&P 500, and you put it in the group and say, guys, I'm paying attention to this ETF. It has these characteristics. You are teaching yourself, but you are sharing that information to the other people. If the 25 people, each person shares 3, that means the 25 of us, we shall have access to 75 ETFs for us to know why. And even it will help me. Then, by the way, from Equities learning, it's going to be a long, like 2 to 3 months. So it can be a little bit more interactive. That means for each ETF that someone brings and I get you more information and the holdings and the concentration and the performance the last 10 years, then each person will walk away with almost 80 ETFs they have learned, even if they are going to just invest in 5 or 7 of those. So I'm going to kind of be an improver you. I gave you that data, use it. Just go out there, even if you just do randomly, do 3. Of those 3, go research about them, then write about them in the group for the others to learn about. If a team you do it, Ronald does his part, Alex does his part, Eve does his part, Liz does his part, Raymond does his part. By the end of 3 months from down the road, every one of us will know about at a minimum of 50 ETFs. And with those 50, you can invest in 5 or 10 without being so much overwhelmed. Eve has received timely payout in Switzerland. Oh, yeah, when you... It's good to invest. I love that. Okay. Any other question? I know we are almost at the top of our 90 minutes. Wasn't it? Wasn't... Yes, Lydia. Oh, okay. Do you remember the 2 Excels I sent to you? The ones, do you have them? Yeah, I sent 2 Excels that had close to 1,000 ETFs. It has a number, it starts with LP, then the name of the ETF. So even if you go into that Excel and just filter out in the name and say tech, growth, high risk, it will start showing you, or you say Vanguard, it will bring you all the Vanguards. Fidelity, it will bring you all the Fidelities. iShare, all the Blacklocks. PIMCO, all the PIMCOs. Like that, you start seeing the pattern in them. Yeah. All right. I think we have come at the top of the hour. If no questions, let's take the other questions in the group chat. Next 2 months, July, we shall look so much the Kenyan. We are going to focus a little bit on the Kenyan market because I believe there is money to make in 2027 in the Kenyan market. So I would want us to prepare now. Potentially, I would have got even the lawyer to help us get a few things moving. All right. Thank you so much. Yes, Lydian. No, for all of us. If you are invested in Uganda, then investing in Kenya is an important market. No, not necessarily. The Kenyan market, like I said, I rank them this way. Uganda is like primary. Kenya is like secondary. The global market is like the university kind of learning. So I want the lessons we shall pick in the Kenyan market will be important, and it will be something that I would want you to start investing in from a regional diversification. Yeah. Yep. 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 The Kenyan market is more liquid. It's way better. That market is it's like 5 times more advanced, not 5 times, like 10 times more advanced than ours. Yeah. So that's why I want to do a session of it on its own. You're most welcome. You're most welcome. All right. Thanks, everyone. Have a lovely Saturday. Talk to you in July.